Vincenzo's Go Crypto Investing this November the 7th, 2025. And the key critical questions that you are all asking and wondering is the 7-day stretch of massive Bitcoin outflows and Ethereum in their ETFs. Is that a sign of things to come and a change in the course of what's been going on the last 12 months of the mass inflows into those ETFs? The Bitcoin price briefly went below 100,000. Is that the bottom? Is the upside potential 124,000, or are we going down lower towards 64 to even $74,000 potentially, having very uncomfortable phone calls from lenders to MicroStrategy and other quasi-Bitcoin companies? You can see Bitcoin faces 1,342% liquidation and balance, 713 million in crypto positions wiped out. We'll get into that and explain to you what that means for the short, medium, and long-term trajectory of the cryptocurrency market. And all other things going on in the news that I feel that you need to know and is important, like Tether moves nearly 100 million in Bitcoin to reserve wallet. That's something interesting. Is Tether about to sell a bunch of Bitcoin? Bitcoin bull market peaks indicators. Analysts project 50% dump. We'll get into all that and the altcoin questions that you need in this video update. And we're going to get right on into the Bitcoin price. And you can see part of the question that we talked about there in the intro is you can see we're still above the 95,000. We have not, I repeat, we have not hit the $95,000, which is the 50-day moving average in the weekly time frame, correct? Yes, that is correct. And I believe that we are going to hit that before any kind of substantial move to the upside happens. We had that bearish cross where the 50 right here in red got below the 100 or medium term moving average in the daily in blue. And you can see now it's below it and it's falling fast, and it's going to have a bearish cross where this will, in about 3 to 5 days, unless there's a massive turnaround in the Bitcoin price, I'm forecasting a golden bearish cross where the short-term moving average will dip below the 200-day long-term daily time frame moving average. And I do believe in the short term, our next major move in price action will be actually coming down here to the 95,000 as soon as this weekend potentially, because I believe what's on the table, like we were talking about in the intro, the $74,000 to $79,000, which is the 100-day moving average in the weekly time frame, correct? Yes, that is correct. And also, well, we were talking about a potential $64,000 or near $60,000 Bitcoin. That seems far-fetched. I understand that, and I agree with you, but it is plausible or possible, another way to look at that we do, like talking about in that intro, hammering away at another point. The 200-day moving average is down there. There was a rhyme and reason why those numbers were thrown out. And yes, those are very possible. And there would be a lot of uncomfortable phone calls from lenders to quasi-Bitcoin treasuries like a MicroStrategies, because everybody knows that. That's why I use MicroStrategies, like a MicroStrategies. And there's 500, 1,000, 100 other companies now that have turned into those, and that's very interesting. If you want to turn this around and get bullish again, you're going to have to hold this 50-day and the weekly, turn back up, and then when you get back into this area, a liquidity zone, the overhead daily time frame moving averages are going to be sniffing, hunting, and in the vicinity to knock the price down, right? So that's what we're looking at in the Bitcoin. I am pretty bearish, and I've been for the last several weeks. Actually, the last 8 or 9 weeks, even after we had that brief return rally to create a new Bitcoin all-time high, I have been bearish pretty much through this whole thing. You can see the Ethereum price is going to have that bearish cross probably tomorrow, looking at it, forecasting this out, where the 50 will get below the 100, the medium-term moving average, and eventually you're going to have a golden bearish cross because the price has dumped, the price has dropped, the price has moved so much, so quick, so fast in such a short amount of time. The short-term moving average, what these mean is when the price moves like here to current price of 30% in the matter of 2 to 3 weeks, the 50-day is going to correct a lot quicker and turn around and start to turn down before a 200-day moving average would, right? And we're going to have that bearish cross, and I think we're going to have a golden bearish cross, as I believe the next move down, you could potentially come up here to get rejected. I'm not thinking you're going to, but you could come up to the top part of this green support and resistance box that's floating around there at about 34.74. But I believe the next major move, you're coming down here for a major hit for a day or two at least in a daily time frame candlestick, not just a wick. that you had right here. See that? That was just a wick. I believe you're going to have much more than that. And then you could have a sympathetic bounce off of a liquidity pull and a liquidity zone on the bottom part of that major green trading support and resistance zone. And you can see it was a major area of resistance on the way up for multiple days to a week and a half. And it was major support back in the beginning of 2025 after we pumped. It was major support for about 2.5 months, December, January, into February, before it finally capitulated and flushed out of there in early February. And I'll circle that so you can see that right there. You can see when it finally broke out of there, you had the major price action move down and a major volume uptick, right? So that's very critical, because if you do break that, we brought it to the attention and we've been harping on, if you break this critical area up there that we just talked about, your next major support level is sitting down here, and we're going to change that to a purple. Down there at 24.75 in the middle, the major last support zone before you blast it off into the next major green support and resistance box. So if you do break, when you do come down, because I am calling for a come down here to 33,068, if you break that, 24.75 is definitely on the table, and I believe what happened. You can see our initial target was hit down here after we collapsed through the 50-day moving average in the weekly time frame. We've had the golden bearish cross where you can see the 50 is now below the 100 or the 200 in green, and the 100 in blue is going to get below the 200 in green, and then it'll be red, blue, and green, short to longest from bottom to top, and that signifies an extended bearish period. And you can see right now we did hit that 50-day or the 100-day moving average in the daily at 25 cents, and it was a full lateral flush from where the major support was after the big liquidation of an 18.86% down. And I've been warning the whole time that everybody thinks that was the wick that cleared the board and set the stage for the move to the upside. And I've been warning and talking and harping, whether anybody's listening or not, that's for them to decide, that what if, because everybody thought that the last 3 years, November, December holiday rally, everyone gets rich, we all go to the bank and have a great Christmas and New Year's, followed by a late winter and early spring sell-off. What if that this was showing dangers and flaws in the overall crypto, especially the altcoin market, of lack of liquidity, right? And everybody thought that was it, but what if it was going to go the other way? Because everybody dumped everything they had in, sprinkled it in across the sphere of the crypto world on whatever their individual hearts desired on a coin when they seen 30 to 70% wick downs. And most of the coins where you could buy it, like an XLM would have been on Robinhood, you could have got them at about 27, 28 cents. And before you couldn't have got the wick, but about 28 cents. And everybody loaded up and continued to load up during this long consolidation for about the 2-week consolidation along the major support levels. It gave everybody a chance to put in anything they had on the side, and they did. And now it's coming down, and we've had massive loss and leverage again because people just can't help themselves with that dirty leverage. And I was warning, what if we come back down to the 100-day, which we are? And what if we came down to the 200-day, which I believe we are? And what if we actually came back and hit that wick low, and that's where you actually had to come down? It would be a shock to the system, and I believe it's probably going to happen. I think the 200-day and the weekly is happening, and then it's just, can we get to 18 cents and 16.5 cents, right? I'm not sure about that far down, but I believe the latter, the formatter is going to happen. You can see again, we're getting rejected, and we were calling after you had the big wick down where XRP actually dipped down all the way to $1, right? On the wick, you couldn't have bought it unless you had a rogue limit order for an extended period of time just sitting there. But we were warning as we've had these bearish crosses, and it just had a golden bearish cross where the 50 is now below the 200 or the long-term 200-day moving average. And you can see where we had that wick down and where we had the nice rally where it gave everybody, again, a chance to load up in here because everybody thought it was back to the moon because we liquidated all these people on leverage. But I warned, you were likely to come down here to the $1.77 And the 50-day and the weekly that you were sitting and trading on would likely not hold. Even as we came up into here, I was warning we got rejected by the daily time frame moving averages. The volume was minuscule to none, and it looked like we were coming back to the 50 in the daily. But if you came back to 50 in the daily, I was warning you it wouldn't hold, and before you knew it, you'd be down here at the 100-day day moving average in the weekly time frame at $1.77, and even $1.28, the 200-day moving average in the weekly time frame over the course of trading through could actually end up coming all the way down there, catching everybody by surprise, pulling a fast one over the eyes of the market and the retail. And old Vincenzo was here. Old Vincenzo was trying to warn and prepare and give you the education that nobody else is giving you, or at least challenging you to look at a point of view you're not thinking of, because that's how asset millionaires are built, and that's what we're here for. I'm not a financial advisor. I would never tell you to buy, sell, trade anything. I'm just here showing you what I am doing to become an asset millionaire, which I will, and my current forecast is within the next 5 years, and sharing the information that I have learned on a daily basis and what I am doing with you, with hopes that it can give you some kind of advice, education, and information, and help you on your goal to becoming debt-free, which is critical. No credit card debt, no car payments. If you have a mortgage, work to pay that off. And as you increase your income, do not increase your standard of living with that dreaded lifestyle creep. Invest that new money from your wage increase into investments or to pay off your mortgage, to increase your net worth and to get your money increasing and compounding for yourself. If I do anything that helps you in your life and you want to support the channel, the best way to do that, to keep this videos coming daily for free like they have been and will continue to be, it's $3.99 a month. It starts at video description and or pinned comment. Join Jabroni Killers. It's much appreciated to all of you, and that's the best way to help support the channel. Many have asked, just needed a quick time check. We got plenty of time. So that's what's going on in the XRP. If we look at the DGB, it had the big pump yesterday, and we were talking about as long as the daily candles were bullish and increasing in volume, the pump could continue because it was a greater than 100% pump or near. But now the last 2 days, it was steadily going sideways as the price was coming up. Usually it signifies the trade is trading out and the price is going to eventually turn around. And now what you're going to watch is on the retest, can you hold that 0.00838? Or is it going to fall back through there and come down to the 200-day moving average in the daily and work its way down and eventually end up back where the pre-pump started, just as everything's been happening the last essentially 12 to 18 months in DGB. Every time it pumps like this, it quickly comes back and gives it all back. That's what we're going to be watching. I still believe that there will be major signs of life next year. But currently not right now. The same thing with AMP. I still believe next year is going to be a big year. But could this be about to have a 60 or 80% pump like DGB just did real quick, because it is extremely oversold? And this would be a great time where everybody's loading up bearish leverage to the downside, where you blow some of those out and you have a quick 60 to 100% pump from the swing low, which was down here. So that would be getting you back up into here, and then just to sell it off like DGB. I could see that happening. I'm potentially calling that as maybe happening this weekend. And if it does happen, that's exactly what's happening. It's following a DGB oversold, getting out all the built up shorts that are currently in there. And if we look at something that we were talking about, U.S. spot ETF inflows saw $240 million in net inflows on Thursday, ending a 6-day. Something else we were talking about in the intro, 6-day, you heard that correctly, 6-day streak of BlackRock iShares Bitcoin Trust, led with $112 million in inflows. But there was a drastic sell-off and outflows taking place during the drop. Right? And that's something that I wanted to cover yesterday and just did not have time during the update. Bitcoin faces brutal 1,342% liquidation imbalance. It took less than 12 hours for the market to punish over-leveraged Bitcoin traders again. Roughly 66 million in BTC positions were liquidated overnight, a staggering 93% of that came from the longs. Like I've been telling you and warning you and harping on since 4 weeks ago today, that these people, the retail specifically, thought that dump was it, and they went in big, and they didn't only go in with shares, they went in on the leverage again. They got bit and they got bit again. And I was warning of this happening. And I still don't believe the downside is done, because everybody still believes that it's just going to go up very, very quickly. When everybody thinks that, usually the market has other things liquidated. Staggering 93% of that came from those longs. The imbalance between longs and short liquidations, 1342 by CoinGlass Liquidations heat map, highlights how one-sided the bullish positions had become right before the drop. The pain began when Bitcoin fell below 101,000, triggering a cascade of margin calls that briefly pushed the price down, as we were talking about in the intro, below 100,000 to 99,200 before a modest recovery. Chart shows that coins hovering around the 100,000, down 0.2% for the session. The movement consists with a cooling off in funding rates across major markets, suggesting that some traders began reducing their exposure while awaiting a decision, a decease in volatility. 713 million wiped out market. 713 million in liquidations erased in a full day of speculative leverage. Ethereum accounted for 40.53 million, while similar currencies as AVAX, Solana saw 11.26 million and 6.92 million respectively. The largest single order liquidated on a hyper liquid was a BTC position worth 15.31 million, suggesting that even larger traders were affected. Most charts now show liquidity pockets clustered around 98,000 and 101,300. A range could determine whether Bitcoin stabilizes or experiences another wave of liquidations, something that we've been warning and why we never trade on leverage and do not promote leverage trading. But we've been telling you that we thought that the price was going to come down. That's right, going to come down. You heard that correctly. Continue to come down in the face of a 4-year pattern that all the traders were jumping on, that November, December, January, pump, sell off, late winter and spring. They were buying it again, and it only reinforced 4 weeks ago what they thought was clearing the way for this, which now we are approaching the latter half of the beginning of November, and we're still dumping. New Satoshi theory says Bitcoin creator may soon come back amid quantum threat, which we went over that a few weeks ago, that quantum computers could threaten the security of Bitcoin by breaking the what was once thought not breakable blockchain, right? But these new supercomputers that the US and other countries around the world, China, Russia, are heavily putting billions and billions of dollars in, and their forecasts to start coming online next year. And that would change the game for Bitcoin, as security in Bitcoin would make Bitcoin essentially obsolete, because a supercomputer could instantaneously hack your wallets, right? And the keys. And that was supposed to be part of its lore, was untraceable, unbreakable, unhackable, right? As long as you didn't give your keys out. Tether moves nearly 100 million in Bitcoin. We've seen one more thing I wanted to talk about. Bitcoin ETF, United States Spot Exchange Traded Funds recorded 239.9 million net inflows on Thursday, ending a 6-day slump. Outflows draining almost 1.4 billion. That's right, 1.4 billion got wiped out of the market over that 6-day outflow. Assault, brother. Goddamn assault, brother. Right? According to data from Far Side investors, the reversal came after a turbulent week of profit-taking driven by macroeconomic uncertainty, which led to the redemption across the largest institutional Bitcoin investment vehicles. The rebound was led by asset managers BlackRock, which added 112.4 million in its iShares Bitcoin Trust, IBIT, following Fidelity's Wise Origin Bitcoin Fund, FBTC, with 61.6 million. The ARK 21 shares Bitcoin ETF, 60.4 million in Grayscale, GBTC, which had experienced consistent outflow since mid-October, showed no change. In total, the 6-day sell-off marked one of the steepest pullbacks since ETF started trading in January. So that's something very interesting to note. Bloomberg ETF analyst Eric something said in a Friday X post that despite 20% market drawdown, U.S. Bitcoin ETF saw less than 1 billion in total outflows, which means 99.5. That's right, 99.5. I'll repeat that one more time. 99.5% of assets remain invested. ETF investors hung tough, highlighting the staying power of long-term holding. He added that strong retention rate suggests that selling pressure didn't come from outside investors, but rather from inside the house. How Ethereum and Solana performed. Similar to Bitcoin ETFs, the exchange-traded Ethereum also saw a 6-day outflow stretched on a smaller scale. According to social value, spot ETF had a 6-day outflow resulting in about 837 million. That's right, 837 million being withdrawn from the ETF-based crypto investment product. This was finally reversed on Thursday, November the 6th, when spot ETF saw small gains of 12.51 million, very minute in comparison to the 837 million that went out over 6 days. 12.51 million in one day is very, very minuscule, and you can see how it cascaded starting on October the 29th and ending on November the 5th. And we'll see what the next 5 days bring, if it's more outflows next week or if it's more inflows. And we started to turn around. Solana ETF performed well since the launch October 28th. Solana-based products have seen 322 million in inflows since their launch and haven't had a day of net outflows. Right? That's very interesting. So what that tells me is that's going to happen at some point. Like the channel, subscribe. I got to let you go. My lunchtime is winding down. Peace and love to my beautiful audience. The Rock's Eyebrow, Jay.